Hello and welcome to Competition Bytes podcast series from Rajah and Tann Asia, Competition, Antitrust, and Trade Practice. In each podcast, we bring you the practical issues on the recent antitrust topics across Asia, on the go and at the press of a button. I'm Vovo Iswanto, Competition and Antitrust Partner from Asgaf Hamzah and Partners, part of the Rajah and Tann Asia network. In this episode, we're going to discuss the development on competition in the digital market. We all know and are experiencing firsthand that the digitalization are reshaping economies and societies in many fronts. It promises spurts of innovations, efficiency, and improvement. However, at the same time, it can also be inconveniently disruptive in the case of failure to adequately adjust policy frameworks to the recent developments and of inability to cater to the surfacing key challenges. We have with us today a team of representatives from our competition and antitrust team in Singapore, Malaysia, and Indonesia, who will address and converse about what jurisdictions and national competition authorities have done in terms of attending to the recent developments of digital market, particularly in relation to businesses and economy, the key challenges and trends, and what we can expect in the coming years. Okay, now let me introduce our special speakers today. We have Tanya from Singapore, our competition partner from Singapore, who is an economist. We also have Jane from Malaysia, our competition partner from Malaysia. Last but not least, we also have Farid from Indonesia. He is co-head of the Competition and Antitrust Practice Group of AHP. Before joining AHP, Farid served as the head of prosecution division and head of the subdirectorate of merger and acquisition in KPPU for more than 7 years. Okay, so we have introduced our speakers, and it's time to start our first bite of the third podcast with Tanya from Singapore. Tanya, we have heard that the Competition and Consumer Commission of Singapore was going to update the competition assessment tools following the issuance of their market studies on e-commerce platform. Have there been any interesting progress on that end, which particularly may affect the day-to-day businesses?
Thanks, Vovo. Yes, the Singapore Competition Commission, or the CCCS, had published a market study on e-commerce platforms in September 2020. CCCS had conducted the market study as they wanted to better understand business models and operating environment of e-commerce platforms that compete across multiple market segments, what CCCS terms as super apps, and their impact on competition and consumer protection issues. Now, CCCS's overall conclusion from that market study was that there were no major competition concerns involving e-commerce platforms in Singapore at the moment, and CCCS's existing competition framework remains relevant and sufficiently robust to address major competition issues that may arise from the growth of e-commerce platforms in Singapore. But as part of the market study, CCCS identified certain areas where it would be useful to give businesses more clarity and guidance on how the Competition Act would be applied in the digital space. Therefore, on the same day that it published the e-commerce market study, CCCS also issued a public consultation on its proposed amendments to the various CCCS competition guidelines. Some of the proposed amendments were to clarify how CCCS would apply its competition framework in the case of digital markets. For example, CCCS proposed revising the market definition guidelines to clarify its approach to market definition in the case of multi-sided platforms. CCCS also proposed revising the abuse of dominance guidelines to include control of data as a factor to assess market power. CCCS also proposed including self-preferencing as a theory of harm. Self-preferencing occurs where a company gives preferential treatment to its own products or services compared to third-party products or services that are also being sold over that company's platform. The concept of self-preferencing as a potential abuse of dominance has been looked at in overseas competition cases such as those involving Google Shopping, Amazon, and Apple. CCCS also proposed revising the merger guidelines to clarify that a merger involving firms that are important innovators can lead to a substantial lessening of competition even if the firms do not have a large market share. So we're still awaiting the issuance of the final revised CCCS guidelines following the close of the public consultation. But businesses in the digital space can take guidance from some of these proposed changes.
Thanks, Tanya. Now I'm going to Jane. So how is the competition situation for the digital market and economies in Malaysia? Has the Malaysian Competition Commission issued a guidelines for businesses to navigate their digital businesses there?
Thanks, Vovo. There have yet to be guidelines issued by the Malaysia Competition Commission, in short we call it MyCC, specifically addressing issues in digital markets in Malaysia. There are, however, the guidelines on Chapter 1 prohibitions which address anti-competitive agreements in general, as well as the guidelines on Chapter 2 prohibitions which shed light on how MyCC approaches the prohibition against abuse of dominance by market participants. However, this is not to say that digital markets in Malaysia do not have the attention of MyCC. MyCC in October of 2019 issued its proposed decision which found that Grab had infringed the prohibition against abuse of dominance under the Competition Act by imposing a number of restrictive clauses on its drivers. These restrictive clauses prevented the drivers from promoting and providing advertising services for Grab's competitors in the e-hailing and transit media advertising market. It is also important to note that MyCC has, sometime in July this year, together with the Malaysian Ministry of Domestic Trade and Consumer Affairs, carried out an inquiry into the Malaysian digital market. This inquiry came as a result of public outcry on issues relating to services of food delivery platform companies. The imposition of allegedly exorbitant commission fees by such companies and the price of food and beverages on these platforms. Based on news reports, the CEO of MyCC, Iskandar Ismail, stated that all options are being considered in approaching the issues, including invoking MyCC's enforcement powers under the Competition Act and working closely with the KPD and HEP to address issues raised by the relevant industry players. Hence, one can see that although there are no specific guidelines targeting the Malaysian digital markets, MyCC has no trouble applying the current guidelines and legislations to the Malaysian digital markets and enforcing competition laws in these markets.
Thank you, James. Let's move on to Indonesia. Farid, what are the key challenges so far in Indonesia? Has the Indonesia Competition Commission issued any certain guidelines for e-commerce or any digital market?
Thank you, Vovo. Due to the COVID-19, the interest in the digital market are also increasing in Indonesia. However, there are still no specific regulations and guidelines for competition in the digital market. This still remains a challenge. In the absence of specific guidelines for competition in the digital markets, the standard competition law guidelines are still in force for digital markets. Nevertheless, the KPPU has been quite active in issuing several reports and conducting webinars relating to the competition in the digital market. More or less, they can reflect on how the KPPU will assess the competition issues in the digital market. In 2019, the KPPU issued 2 studies related to the digital market. One is behavior of e-commerce businesses, and the other is digital economic policies research. The former observes the competition issues in partnerships between e-commerce marketplace and small and medium-sized businesses, while the latter focuses on the importance of a competition authority to monitor and safeguard data from being misused for unfair competition practices. Back to you, Vovo.
Thank you for the elaboration. Touching more on specific issues, how does the competition authority in your jurisdiction define the relevant market in digital sector? Are there any special rules or exemptions applied to horizontal or vertical agreements in digital markets? Also, has the competition authority in your jurisdiction acknowledged and assessed issues such as data protection, algorithmic pricing, geo-blocking, or killer acquisitions? Let's begin with Singapore. Tanya, could you give us any comment on that front?
Sure, Vovo. In relation to market definition, the Singapore Competition Commission, CCCS, has, as mentioned, proposed some changes to its market definition guidelines. CCCS has clarified that before conducting the market definition exercise for a multi-sided platform, it will first identify the appropriate theories of harm. Based on these theories of harm, CCCS will then consider the interactions between the different sides of the platform and assess whether the relevant market should be treated as a single multi-sided market, which includes all sides of the multi-sided platform, or whether it should be treated as multiple interrelated single-sided markets when it carries out the SNP tests. Regardless of how the relevant market is defined, CCCS has noted that the competition analysis should take into consideration the interdependencies or lack of interdependencies between the different sides of the platform and the competitive constraints faced on each side of the platform. The CCCS has also acknowledged issues such as access to data and data protection, algorithmic pricing, and killer acquisitions in its various reports and proposed changes to the CCCS guidelines as mentioned. On data, for example, CCCS has, in collaboration with the Personal Data Protection Commission and the Intellectual Property Office of Singapore, published a research paper on the implications of data analytics and data sharing on competition policy, personal data protection, regulation, as well as intellectual property law in Singapore. How about in Malaysia, Jane?
Thank you, Tanya. Unlike in Singapore, in Malaysia, MyCC has yet to show that it has considered data protection in substantive competition law assessments. Also, to my knowledge, MyCC has not publicly demonstrated that it has acknowledged or assessed issues such as algorithmic pricing, geo-blocking, and killer acquisitions. I understand that these issues have become important considerations worldwide, and the issue of killer acquisition has in particular, as of late, garnered much attention. Although these have yet to be assessed by MyCC in Malaysia, it should be kept in mind that competition authorities around the world cooperate and work together. They help each other track down and prevent violations of antitrust laws, and they work together if antitrust problems occur in multiple countries at the same time. Hence, with such cooperation between competition authorities and with the guidance MyCC could possibly obtain from these other competition authorities, MyCC may very well be monitoring these issues relating to algorithmic pricing, geo-blocking, and etc. from the shadows. As regards market definition, no, there isn't any special rule or exemption applied by MyCC to horizontal or vertical agreements in the digital markets in Malaysia. As Tanya mentioned, multi-sided platform is an important feature of digital markets, and the CCCS has already proposed changes to its market definition guidelines to clarify its approach on market definition in this regard. Similarly, in the EU, the European Commission is adapting its market definition notice to the new world of digitalization. Although there's nothing specific to the digital markets yet in respect of market definition, I think it is only a matter of time before MyCC also takes action.
Thank you, Jane. And what about Indonesia, Farid?
In Indonesia, we understand that currently the KPPU is in the process of updating its relevant market guidelines to address challenges in defining the relevant market in the digital sector. Unfortunately, to date, we have not seen the draft, so it remains to be seen how the definition of the relevant market will be developed on these new KPPU guidelines. On the other hand, currently there are no KPPU's regulations, precedents, or decisions that specifically address the use of pricing algorithms, geo-blocking, or killer acquisitions. That said, in the 2020 study, the KPPU observes the likelihood of utilization of algorithms for pricing strategies. It looks into the relationship between the market position with platform companies such as search engines, social media, video sharing, and payment system. It is argued that the pricing algorithms may strengthen the company's market share in the relevant market. KPPU noted that it will be a challenge for the traditional approach of competition law to detect anti-competitive behavior concerning the use of pricing algorithms. In terms of geo-blocking restrictions, based on the same 2020 study, it appears that KPPU is also considering that the conventional competition tools may not be sufficient to assess the impacts of geo-blocking restrictions in the digital sector. Further, as geo-blocking restriction and killer acquisitions are unique to the digital market, we may expect that the KPU could follow approaches in other jurisdictions whenever they are suitable. So it remains to be seen the development in this area. Over to you, Vovo.
Thank you everyone for the comprehensive explanation. Playing a bit with numbers, it is recorded that since 2015, the number of internet users in the 6 largest economies in ASEAN has grown enormously. And accordingly, I suppose, massive collection of data. So what role do you think big data will have in competition in the digital market? Tanya, would you like to share?
Yes, Vovo. It is widely recognized that data plays an important role in digital markets. Big data is commonly understood as the collection of large data sets, such as detailed business operations or customer behavior and preferences, through a wide range of sources, which can be both online and offline. Depending on the organization's ability to merge and use the data can then be used to analyze and predict patterns, trends, and other relationships. The rise of data as an important asset has raised concerns on how companies use and protect the data they have, and whether the control of large amounts of data by a few companies can give them market power. I think data can affect competition and competition assessment in digital markets in several ways. First, it can be a source of market power if the data cannot be replicated under reasonable conditions by competitors, and if the use of data is likely to result in a significant competitive advantage. For example, if the company is able to use the data in a big way to improve the quality of its service, expand into other market segments, or increase demand for their products, etc., which their competitors are unable to do. Second, it can be a form of abusive conduct if a dominant undertaking refuses to allow access to data, which is regarded as a key input. And third, the use of artificial intelligence and algorithms to utilize the data collected could facilitate cartel or collusive conduct amongst competitors in the digital market space. Back to you, Vovo.
Thank you, Tanya. Now, in terms of merger control, when assessing the competition impact of, say, a merger between tech or digital companies, what factors does the competition authority in your jurisdiction take into account? As an example, does the competition authority raise question on the efficiency and impact on innovation, or perhaps also put concern on the impact of the company's data collections? Perhaps we can start with Indonesia and followed by Singapore and Malaysia.
Sure, Vovo. As far as we are concerned, the standard merger control rules still apply for all sectors in Indonesia, with no particularities applied to digital markets. In KPPU webinars and publicly available KPPU studies, KPPU acknowledged that access to consumer personal data may determine a company's market position and give rise to anti-competitive conduct. KPPU has also recommended to the government to pay importance towards data protection and monitoring of data collection. Further, KPPU also recommended to the government that businesses must be transparent and open up access to data collection by the businesses to the relevant government institution. This is in the expectation that any potential anti-competitive practices arising from such collection of data can be prevented at an early stage. KPPU has yet to raise concern on efficiency and impact on innovation to the best of our knowledge. How about in Singapore, Tanya?
Thanks, Farid. In Singapore too, the usual merger rules and framework would generally apply to a merger between tech companies as well. However, the importance of innovation has been recognized. As mentioned, Cccs has proposed revising its merger guidelines to clarify that where innovation is an important feature of competition, a merger involving firms that are important innovators can lead to a substantial lessening of competition, even if the firms do not have a large market share. For example, CCCS has noted that a merger situation can lead to a substantial lessening of competition if it leads to a loss of competition between the merging parties and the merged entity finds it profitable to, amongst others, reduce innovation, or if the merger raises the possibility of firms in the market coordinating their behavior to reduce innovation too. Therefore, a reduction in innovation is being expressly mentioned as an example of substantial lessening of competition under Singapore's merger control framework. On the impact of a merger on access to data, this was considered by CCCS in its investigation of the Grab-Uber merger. Indeed, one of the interim measure directions that CCCS had issued to Grab and Uber to ensure that the market remained open and contestable while CCCS was conducting its investigation into the transaction was to prevent Grab from taking over the operational data, such as the historical trip data of Uber's riders, so as to enhance Grab's market position. On to you, Jane.
Thank you, Tanya. As for Malaysia, most of you may already know this. Malaysia does not have an economic-wide merger control regime, but only sectorial merger control regimes in the telecommunications and aviation sectors. There has been much talk about the proposed amendments to the Competition Act in Malaysia to incorporate merger controls, but MyCC has yet to indicate the exact date for the introduction of merger control laws, nor the mechanism for the workings of the merger control rules. Without a merger control regime for tech companies in Malaysia and without any indication from MyCC as to factors which it would take into account when assessing mergers in the future, I'm not able to comment whether MyCC would actually raise questions on the efficiency and impact on innovation and whether it would put concern on the impact of the company's data collection when assessing mergers in the tech industry. Nevertheless, I think there is a possibility that in coming up with its merger control rules, MyCC may seek guidance from other competition authorities in addressing innovations and data collection in the context of tech mergers. Back to you, Vovo.
Thank you, Jane. Interesting. Now, what do you think the future prospect of the enforcement of competition law in digital markets will be like in your jurisdiction? On that note, I hope each of our speakers can wrap up with one or two key takeaways on competition in digital market in each jurisdiction. We can start with Singapore and followed by Malaysia and Indonesia.
Well, I would say that digital markets is definitely a space that CCCS is paying close attention to, and our advice to our clients in this space is definitely to be vigilant. For example, in potential M&A transactions involving digital markets, we have advised clients that it is critical to do a thorough self-assessment and to approach the CCCS for confidential merger advice at the very least where there is uncertainty. We have certainly seen the CCCS taking a relatively strict approach in cases involving digital platforms thus far. For example, CCCS has found competition concerns in the proposed merger of two online recruitment advertising service providers in Singapore and gave conditional merger approval subject to commitments offered by the merger parties on price caps and non-exclusive agreements. In Grab-Uber, CCCS had initiated its own investigation into the merger transaction, which was not notified to the CCCS, and imposed directions on Grab, such as to require Grab not to impose any exclusivity requirements on drivers or taxi fleets. CCCS also imposed a penalty on parties to deter anti-competitive mergers. CCCS has also conducted investigations into exclusivity arrangements and refusal to supply within the online food delivery market. Therefore, my last word and advice to businesses in the digital market space is vigilance. How about you, Jane?
Thanks, Tanya. Well, for Malaysia, I would say that in the last decade, the digital industry has witnessed tremendous growth. While this growth has given rise to new business models, opened up new markets, and unlocked significant efficiencies, It has also raised certain competition concerns, and some of these concerns have already been picked up by MyCC. As previously mentioned, MyCC has its eyes on this digital space. So I think there's a high likelihood that the enforcement of competition law in digital markets will increase in Malaysia. As we all know, there has been a general upward trend around the world in relation to enforcement actions against players in digital markets. Competition authorities worldwide have identified enforcement of competition law in digital markets as a priority, and leading competition authorities are proactively pursuing both antitrust and merger investigations involving digital markets. Hence, again, I think it is really just a matter of time before Malaysia jumps on the bandwagon and joins the trend. Digital markets in Malaysia are thriving, and I believe MyCC will definitely ensure that competition in this area is well protected. So to wrap this up on competition in digital market in Malaysia, my advice is never drop your guard when it comes to compliance with competition laws. Although there are currently no specific guidelines addressing issues relating to digital markets in Malaysia, and although MyCC has not looked into areas like algorithmic pricing, geo-blocking, killer acquisitions, and etc., it doesn't mean MyCC is not watching, all right? Thank you. And onward to you, Farid.
Thanks, Jen. For Indonesia, with the rapid development in the digital markets and also as discussed earlier, due to the ongoing pandemic, the competition in the digital economy sector is quite fierce. In that case, we may have the anti-competitive behavior in the sector may be novel and unique, and unlike in the conventional economy. Considering this, the KPPU has been quite active in monitoring the digital markets. Studies and collaboration with academics have also been numerously conducted by the KPPU to get a better understanding of the competition in the digital market. Therefore, we expect that the enforcement of competition law in the digital markets will be increased, even though there are no specific guidelines provided yet by the KPPU. We expect that we can learn a lot on how the KPPU will try to preserve the competition in the digital sectors from cases and precedents. Experience from other jurisdictions will also be influential for the competition analysis, as the KPPU will also likely learn how other agencies maintain competition in the digital sectors. Therefore, for players in the digital sectors, in addition to compliance with the general competition laws in Indonesia, considering the lack of specific guidelines for the digital market, it also becomes important to look at the rules in other jurisdictions that may be adopted by the KPPU when enforcing the competition law in Indonesia.
Thank you, Farid, Jane, and Tanya. So, digital sectors have raised the attention of many competition authorities around the world, including in ASEAN. Some have issued several reports and proposed guidelines on competition law in the digital market that could be useful to give businesses guidance on how the competition law will be applied in the digital space. In the absence of clear guidelines on application of competition law, competition authorities may take benefits of their cooperation with those in other jurisdictions, and existing competition framework may still be used to address competition issues that may arise from the growth of digital sectors. Some competition authorities have proposed changes to their market definition guidelines, and it remains to be seen how they will assess big data, the use of pricing algorithm, and geo-blocking restrictions, as they are unique to the digital market. Therefore, considering the lack of clear guidelines for the digital market, compliance and vigilance are essential for companies in managing their businesses and succeeding in this growing, evolving market. We hope that you found this session and our previous ones useful. Please feel free to drop us your feedback on this session and provide us with your suggestion on what you would like us to discuss on our future podcasts. Thank you and have a nice day.